that, tell our viewers something about yourself first.
Oh yeah, I'd be glad to. I'll give you my whole backstory here. So I grew up in rural Texas, in a double wide mobile home, and very humble beginnings, I should say. My graduating class from high school was only about 100 people, and when I was growing up, I remember my dad would buy these single shares of stock and give them to people. In fact, I have one on my wall right now that he gave me when I graduated college, and that was really the whole gist that I knew of investing as a kid. Was he would buy these single shares of stock. And I remember him coming home one day and he was so excited because he had finally made like a big purchase of stock in gold mining, in a single gold mining company. And I didn't know anything about it at the time. And I never really grasped the concept of like, there are actual riches in the market. I thought that the only way to make money was by going to school and working hard and climbing the corporate ladder. But when I got to college, I took the management track for my business degree, and it's funny because I had several different business degree options to choose from, and I went with the management track because it had the least amount of hours, so I could get out into the workforce and start working because that's what I thought success was. But every time I took a finance class, it really struck me, and like I was intrigued by it, and I wanted to learn more. So I finished my undergraduate and then I started on my MBA, and it was all finance focused. I did every single finance class I possibly could take. And I even was in the portfolio management group for the school. And this was in 2008, which was probably like the worst time ever to be learning how to trade stocks. And then when I got out of college, I managed to find a job in the midst of the recession at a huge company called Raytheon. They're a defense contractor. And I never really fit in there. Originally, I thought, climbing the corporate ladder was what I wanted. But once I got into the corporate structure and I realized I was just one of 75,000 people that worked at this company, it sucked because I felt expendable. Like I didn't mean anything. But there was one really good thing that happened at Raytheon. And that was they started contributing to a 401k plan, a retirement account plan for me. And I didn't put a single cent into this account. And I found out after a little while that I could actually trade ETFs inside of this account. And ETF is kind of like a way to play the market without buying a single name. So you could buy stocks where it's a representative group of all the tech stocks or a representative group of all the financial stocks. And so I could trade these ETFs. And I couldn't trade any options, but I did figure out that I could trade double and triple leveraged ETFs. And I got really excited about that. And I figured that this was something I wanted to try. So I started dabbling, but I never really took it serious. In fact, it's pretty funny. I actually got my account locked really fast by the SEC for violating the free ride rule. And that was because I had a cash account. And in these cash accounts, you have to wait for 3 days for your funds to settle after that you've traded in order for you to trade again. And I was like, I have to wait to trade again? I've never heard of this before. So that was tough, but I managed to win a few trades here and there. And that got me really excited, but I just never really grasped the opportunity that I had before me. And I didn't devote the time to trading. And I just basically hung it up for a while. So this was in 2009. And then 2014, I was working at a different job, and I overheard a colleague of mine saying, hey, if you feel so strongly that Deutsche Bank is going to go down, why don't you go out and buy puts? And my ears peaked up. I was like, what did he say? What are puts? And I was like, I feel like I know what this is, but I haven't heard about puts in so long. And so I was one of those nerds that kept all of my textbooks, and I pulled out the financial textbook from my college days. And it's one of those 900-page textbooks, right? That's wider than it is tall. And I put it on my desk, and it's one of those books where you put it down and the whole earth shakes a little bit. It's so big and heavy, right? So I opened the book, and there's 2 tabs. I'm one of those people that tab everything. I ruin my books when I read them. But in this particular book, there are only 2 tabs. One was for bonds, which are kind of wacky because the price of bond will go up when yields go down and vice versa. They're just weird. But the other tab that I had was on options. And I'm getting goosebumps right now just thinking about it, because it was like, how did the Chris from 10 years before then know to put a little flag on this page that says options, because one day I would come back to it. And so I opened the book to exactly the page I needed to see, and it gives me the textbook definition of what a put is. And a put is a financial instrument that rises in value as the price of the stock goes down. And like any good millennial, I immediately Googled it, and I found out all kinds of everything in the world I could ever imagine about learning about puts and calls and options. And I was just like the light bulb had went off. I was like, this is something I need to look at. And so from that point forward, like every free second I had, I mean, every free second, was studying how to trade options, because it's not like stocks. There's so many different components that go into pricing a derivative versus pricing a stock. So I would be taking course after course, watching YouTube video after YouTube video, just soaking it all up. And I even remember there was a time where I was dreaming about iron condors, which is a options trading strategy. Now I knew I was on the right track, and the at this point I needed to open a options trading account. And remember we talked about I had this account at Raytheon that I'd never contributed a penny to, and I was like, I wonder how much is in there. And so I looked at the account and I was like, okay, maybe we could do something with this. And so I basically cashed it out. And when you cash out a retirement plan, they have taxes, they have fees, and everything else. And I needed $5,000 to start this account to start trading options. And I remember standing in the kitchen, opening the envelope, getting so excited because I was like, this is the check I need to start trading. This is going to change everything. And I needed $5,000, and that check was $5,000.15. I was like, no way. I was like, there is a divine purpose. There is something higher that's guiding me on this path right now. So I open the account, and this is around the time of the elections. And I decide that at this point, I knew everything there possibly was to know about trading with options. And this is going to be my big break. So I loaded up like my entire account on what's called a call ratio backspread. And it's kind of like if the price went down, I would make a little bit. If the price went up, I would make a lot more. But if the price didn't move very much at all, I could actually lose my entire account, like to zero. And I was like, I think I know what I'm doing, so this would be great. So on election night, futures were lock limit down. And I was like, that's fine. I'm going to do great. I'm going to make a little bit of money, and it'll be the end of it. And the options expired 3 days after the election. But the next day, the market opened up, and then it basically went up for the next 3 years. But because my options were only going to expire in about 3 days, I needed the price of the stocks to go up like 10% in order to break even. And they may have moved up 5% or something like that. So I'm looking at this just minute after minute, my account just like going away, just second after second, just watching it like dripping water going down the drain. My account is just going away. And looking back now, realizing what a terrible idea it was. And that was kind of my first lesson that I wanted to share, is that whenever you are trading options, you have to have the right position size, because putting the entirety of my account in this trade could have been enormous. But instead, it was an enormous lesson because I didn't realize the risk that I was taking. So by the end of the week, I had gone from elation that, hey, I'm going to make money, this is going to be great, know everything I'm going to do, to literally losing 2/3 of my account in the first 60 days of opening it. And I was totally dejected. Like I
Obviously.
I could not realize the fact that I thought I knew everything. I put it to use and I blew it big time. And so then I was like, I got to tell my wife about this, right? I mean, like, I don't keep secrets. And so I remember this like it was yesterday. We were driving up the Dallas North Tollway, and it was a beautiful sunny day. She was driving, which is super unusual, which is maybe why I remember it so vividly. And I was like, listen, I got to tell you, I got some bad news. She's like, what do you mean? I was like, well, remember how I started trading? Yeah, I happened to lose like 2/3 of that this last week. And I remember her like, skirt, like, what do you mean? You lost all that money? And I'm like, yeah. And of course, it was followed by a lot of, how could you? Why'd you do this? I'm so disappointed, right? And then at the end, she said, why can't you learn to trade with fake money? And I was like, that's brilliant. I don't know why I didn't think of this sooner, because you can paper trade. And so that's another lesson for your audience, is that you don't have to jump into the market right away. You can actually paper trade. It's kind of like trading as a video game. It's going to open an account for you. It's going to give you a simulated balance, let's call it $100,000, and you can actually play with it. And you can see, oh, this works. Oh, this doesn't work. Really understand the components of using it. And I dove into that like nobody's business. I spent the next 6 months saving every penny I could and paper trading my backside off, thinking, you know what, I am going to make this feel as real as possible. And so at the end of those 6 months, I felt very confident that, you know what, I know what I'm doing. I'm ready to get back into this. So I started trading again, and everything was fine. I mean, it was working. I was making a little bit of money here and there, not really moving the needle too much on the balance. But then it happened again. I blew up my account a second time. And the second time I did it, it was really hard on me, because I remember going with my family on vacation to Disney World and pulling up my phone day after day and just having that sinking feeling in my stomach, instead of enjoying myself with my family, thinking, what have I done? As I learned my lesson about position sizing, but the lesson I hadn't learned yet was about trading with the trend. And I mean, in simple terms, when you trade, you want to go from a lower price to a higher price if you're buying a stock, right? Or buying options or anything like that. And you do that when the price is already moving up. Because if you're buying it when it's going down, there's nothing to say it can't continue to go down. But the inverse is true. If you're buying it when it's going up, there's nothing to say that the price won't keep going up, right? Kind of just following the move of the market, kind of like following the waves on the ocean. And gold had been going down. And I saw something on Twitter, and it was like, this is the bottom of gold. You got to get in now. And so I did. I bought everything I could with gold. And that's another lesson, right? Don't follow anybody on Twitter. You need to figure out your own trading plan and stick to that. Because at the end of the day, gold kept going down and down and down and down for months on end. And I hadn't really structured these trades to where, like I do now, where the risk and return is skewed in my favor. It's actually the opposite, where I might make $100 on the trade, but I might lose $400 on the trade, right? A 4-to-1 return to risk ratio, which is not advantageous to any trader out there. And by the time I got out of the gold trade, I had blown up my account again. And so at this point, I'm like, I have no idea what I'm doing, but I also am not going to give up. And I think most people at this point would have definitely given up.
I think that was really persistent in you, Christopher, that you never gave up even after you lost, repeatedly one time, then second time. So I feel there is a kind of persistence in your efforts. That absolutely. I lost it one time, so let me learn it and then go ahead.
And now it's funny, because looking back, I was like, okay, I have to figure this out, because I know that like this is one of the reasons that I've been put here on earth, is to be a trader and to teach other people how to trade and to share my experiences with others. Because I'm not that person who goes out and brags about all the successes I have. I'm the opposite. I'm very vulnerable, I'm very open, and I like to share what I've learned so that other people don't make the same mistakes. So at this point,
so what advice would you give someone wanting to pursue a career similar to yours? Because our audience, are many entrepreneurs or those business school students who would like to pursue similar career as you.
Follow your passion. I mean, there has probably been something in your life that just really spoke to you, right? Something that came along the way, and you may have put it out of your head. But just think about the times when, like I was saying with the 401k, I never contributed to, had exactly the amount that I needed in my account, the textbook that I opened and told me exactly what I needed on the moment that I needed it. It was these divine providences that came to me. And I feel that that's when you're on track with your life's purpose, those things come to you, and you've got to be aware and understand when those opportunities come. You have to take advantage of them. And so actually that's one of the reasons I started the podcast, was I really wanted to share my experiences and to share what I do day in and day out with other people. And so there was a famous entrepreneur called Gary Vaynerchuk, and I was really into him a few years back. And in that time, he was like, "You have to start a podcast. You have to start a podcast." And I was like, "Okay, I'm going to start a podcast." And so I started it in December 2018. It's literally me talking to myself and sometimes other guests on the phone. But in the 6 months after launch, it had gone from no downloads to being in the top 10 of the iTunes investing podcasts. And I was like, this is unbelievable. I don't understand. But I think a lot of it had to do with the fact that I was so willing to be open and honest. And I got to tell you, starting the podcast has totally changed my life. I mean, the fact that I've been able to talk to some of the best traders in the entire world, and they will openly share anything you could ever want about how to trade, successful mindsets, position sizing, all of that. And we've now crossed 2 million downloads. We have over 500 episodes. And everything that I really feel that has completely changed the way that I trade was from learning from these people, from these mentors that anybody can access for free right now by going and listening to the podcast. And I feel that we as a generation right now are so blessed to be able to have that sort of access.
Exactly.
I mean, could you imagine a generation ago, my father's generation, actually having the access to where I could speak to somebody who has made 200% returns for the last decade and pick his brains on more than one occasion? That wouldn't be possible. But not only have I done that, but I've also allowed tens of thousands of other people to listen in on that conversation and learn and grow in their own trading and investing in business life on their own. So I am incredibly fortunate, and I feel so blessed that I followed the signs that were in front of me that have led to where I am today. And I mean, that's the key to it right here.
And that's the pleasure I am also having in, doing these podcasts. We started it last month only, and unbelievable response. And it is so effective and impactful to do a podcast. I'm able to talk to you. I'm from India, and I'm able to, talk to you, bring you on the show for my audience who are across the globe, from Australia, from Europe, from Dubai, from India, from US. It's thrilling. It's so encouraging that you can learn from mentors from any corner of the world, and podcast
Absolutely.
is such an effective media.
It is, and I saw
instead
a
of reading down the article, even online, it's better to hear someone directly.
Yeah, absolutely, because you can really feel their tone. You can feel and you can understand what they're saying even better.
Correct.
I saw something that said like most podcasts get like 80% downloads or something like the audience listens to at least 80% of that. And if you can have somebody on for an hour, you can get so much content and so much help for them in 80% of that hour. It's amazing the opportunities that we have, not just as creators like you and I, but also for audiences out there.
Correct. So that was really great to have you, Christopher. One last question before we end this meeting today is, what is the one common myth about your profession or field that you would like to share with our audience? Because trading and stock trading is pretty lucrative, and youth get attracted towards it they feel like they can make quick buck, but it's kind of sometimes gamble also. You end up losing more than you earn.
Oh yeah, I tell people all the time, the money I lost, I consider my Wall Street tuition. Just like if you went to university anywhere, you're going to have to pay a tuition. All the money that I lost was what I consider my tuition. But the myth that I would tell people is, it's not like the online gurus, quote fake gurus, say, where you take this 2-hour course and by the end of it, you're going to know all my secrets and you're going to be the next multi-million-dollar trader. It's not true. And the reason being is that you may understand, as I did, the techniques and the strategies, but you don't understand the mental game until you go through it yourself and understand what it's like to have a 50, 60, 70, 80% drawdown in your account. You will never know that feeling until you experience it yourself. And then once you do, you don't want to go back there. And you will understand the steps to take to make sure you don't go back there. So while I can teach you all the strategies, only you can learn the mental game by going through it yourself and understanding what it takes to be successful as a trader. Because it's not like playing cricket. It's not like playing football, where there's nothing on the line. What's on the line here? It could be your potential life savings. And there's a lot of emotions and a lot of energy that gets wrapped up in money. And you have to literally separate and pull yourself away from the outcome and focus on the process. Once you focus on the process, it's so much easier, right? Follow your steps, follow your plan, but don't look at the dollars to say, oh, I made this much, oh, I lost this much. Because at the end of the day, the outcome will sort itself out once you understand and follow your process.
Yeah, that's I think great lesson for our young listeners who want to basically experiment their hand at stock trading or trade options. So one last question that is coming to my mind now that you are here. Which kind of stocks are moving up? Particular industry?
It doesn't matter what I say today, because it'll be different tomorrow. What you or anybody out there, any aspiring trader can do is just look at a chart, and if you see it's moving up,
any COVID particular trend?
I mean, all you got to do is just look at
trend.
No. I'm definitely not going to give any stock picks. And the reason being is because it will change tomorrow. So it doesn't matter what I say today, but just look at a chart. If it's moving up, the trend is up, you can follow that trend. If it's moving down, the trend is down, don't buy that stock. And I mean, that's how I look at it, really. At the most basic level, you want to be following the trends, just like if you were following the waves on the ocean.
How about selling your moving down stocks options?
I actually don't do shorting, which is where you profit when the price of the stock goes down. And the main reason I don't is because for the last, forever, if you go on any stock market chart, like index chart, that's what I'm trying to say, like the S&P 500, NASDAQ, whatever, and you look at the trend is up. And so there's really no point in trying to catch those small moves down, when in the overall longer term, you might just have a better option to just wait it out. And then when the stock goes back up, you can buy it at a better price. So personally, I don't go short.
Thank you, Christopher. It was nice to have you on our show. Dear audience, if you want to listen to more of Christopher, you can see the background 10minutesstocktrader.com. You will get more of his podcast. He's also running his own podcast, giving his strategies to you. And for us, please follow our website, business-strategy.in, and subscribe our YouTube channel at L'strategyq, and all our social media channels on Facebook, Twitter by the hashtag Bizemag, Bizemeg. I'll just share the screen for your convenience. So here it is, facebook.com/Bizemag, twitter.com/Bizemag, instagram.com/Bizemag, and youtube.com channel L'strategyq. Thank you so much. Bye-bye. Have a good day. Have a good weekend.
Oh, thank you. Thanks for having me on.
Bye-bye.